Okay, and welcome back to Sake Liga's Policy Radar podcast. Today, joining me is Russell Lamberti from ETM Macro Advisors. Russ, good talking to you again. Please tell us about our latest report.
Yeah, thanks. Very good to be with you, Gerard. Look, the report is a view of where we are in the fourth quarter of 2020, which has been obviously just a remarkable year for all the reasons that people know about that we don't need to get into again. And what we're trying to do is now, having been through heavy lockdowns, certainly in South Africa and in most of the world, we're now trying to assess where we are in terms of recovery. How quickly is the global and domestic economy recovering? And so we go through that in the report, and we try and make sense of the shape of the recovery. We also look briefly at some of the official domestic COVID data. It's not something we've really looked at in previous reports. We just take a brief look at the headline mortality statistics on COVID. There has been an uptick in official COVID deaths in the last few weeks, but nothing anywhere near like what we saw at the peak of the epidemic in sort of the middle part of the year, July and August. But of course, what we're seeing globally is, and we touch on this in our global section in the report, what we're seeing, of course, is renewed lockdowns in Britain and in lots of parts of Europe. And there's a renewed fear of the virus. And of course, some of the data is not looking so good because we're moving into the Northern Hemisphere winter. The Northern Hemisphere winter is now on. And of course, for respiratory viruses, there's a seasonal component to that. So as those respiratory virus deaths, COVID deaths pick up, it's creating renewed fears, and we've got to be aware of that from an economic perspective. What is happening in terms of offshore lockdowns? How is that impacting global trade, global demand for South African exports? And how is that impacting, South Africa's economic activity? So we look at that as well. We look at how quickly the world is being able to actually come out of lockdowns, and the answer is not very quickly at all. As I've just pointed out, there's lingering restrictions on movement. There's lingering restrictions on economic activity, which is concerning. The slight good news is that we've seen a slight uptick in our presidential policy scorecard. We're now giving it a score of 4 out of 10 or 40 out of 100. And that's largely due, Gerard, to the fact that we've seen some marginal improvement in some data in South Africa relative to the rest of the world. The Rand, for example, since March and April, when it sold off very hard, the Rand has recovered quite impressively relative to other currencies. There's some good reasons for that. That's not an entirely unexpected development. And one of the reasons for that is that the SARB, which is an institution of state policy and therefore is relevant to this policy scorecard, the Reserve Bank, the SARB, remains a reasonably well-managed, well-run bank, and has responded to this crisis in a far less extreme way than you've seen overseas. You've seen overseas tremendous amounts of money printing, vast increases in the money supply, very, very low interest rates to the point of zero or even negative interest rates. So the South African Rand has an appeal to it that a lot of other currencies don't have. South Africa's fiscal policy is obviously under major, major strain, as we've seen through this whole period. But so are many other countries. Many other countries are also borrowing huge amounts. And so South Africa's fiscal situation, is very, very bad, but it's part of a world, fiscal problem. And so there's a number of reasons why we've just seen a slight improvement in the policy scorecard. We've got a resumption of economic activity from the hard lockdown. The job market is starting to repair itself again. It's still very, very weak. We saw officially about 2.2 million jobs lost in the second quarter. We only really gained back about 400,000 or 500,000 of those jobs in the third quarter. And so you can see this sluggish recovery back in jobs. So household incomes are still under pressure. It's still a very, very tough environment out there, which we point out in the report. On the first page of the report, our business conditions barometer is sitting somewhere around about 3 out of 10. In the heat of this crisis, it got to about 0 out of 10. So very, very harsh conditions in the second and third quarters of this year, but it's slowly starting to see some recovery. So there's some good stories and amidst a lingering bad story, which is that this whole COVID crisis, this whole lockdown crisis has been very, very damaging structurally to a lot of economies. But there is some light emerging now as people are able to move around and become more mobile.
Yes, Russell. Now, of course, the report is called an economic overview for business decision making. So obviously, we're focusing on giving people and our members at Sakeliga and the public good inputs about how to make decisions in this time. You know, especially when I'm dealing with businesses, you have to think about allocating capital. You have to make employment decisions. You know, a whole range of things that have to happen. And Russ, in terms of domestic conditions, what do you think should businesses be considering at this point? What is the most important consideration in your view?
Well, I think that we've got to continue to be vigilant about how the government is talking about the COVID problem, whether they want to extend the state of disaster and whether they want to still reserve for themselves the right to lock us down again, like we're seeing overseas. I think these are things we have to be vigilant about. I think we have to pay close attention to household incomes and the risks associated with widespread job losses that are not coming back quickly. Certain jobs come back quickly, but other jobs take a lot longer to recover. We recovered only about a fifth of the jobs we lost in the second quarter. We recovered only about a fifth of those jobs in the third quarter. And so there are still many, many people unemployed. And now what we're starting to see, of course, is these loan repayment holidays that were instituted in the second quarter started ending in the third quarter. And more people are going to be forced to have to start making their repayments again, servicing their loans. And if they've lost their jobs, if they've lost income, if their incomes have fallen substantially, they're going to struggle to do that. That's going to put pressure on the banks again. It's going to put pressure on credit providers and a lot of ongoing pressure on consumer spending. So it's still a very constrained environment out there, Gerard, I would say. The fiscal situation in South Africa, I mentioned that many other countries are also in a bad fiscal position because tax revenues have collapsed. But South Africa's situation is, an ongoing concern. And it does raise the prospect of, lingering risks, for example, to state taxation policies. We've got the budget coming up in February. And, we just need to be on the lookout and be speaking to our tax advisors and speaking to people who are getting information from National Treasury about potential taxation changes, increases in certain taxes. That's obviously something that people have to worry about. I think people who are involved in exporting have to be very focused on what's happening in the countries that they export to, what's happening in terms of lockdown, in terms of policy. So I think that's important. And then finally, I would say that there's this ongoing risk and constraint on the tourism industry, a big sector in South Africa, and that impacts a lot of towns and cities that are based along the coastline of South Africa and also near certain tourist hotspots. It's still a very difficult world to travel in successfully, to travel in easily. And so I think people have to be very vigilant about that. On the plus side, for people who are dealing with servicing debt, interest rates are low and are likely to stay low for quite some time. The Reserve Bank kept rates steady very recently, but there was talk that they might even cut a little bit further. And so whilst they held interest rates steady, there's a desire to potentially even drop interest rates a little bit more. And then, of course, the rand is reasonably resilient. And so whilst exporters might have some competitiveness issues with the currency and be facing foreign markets that are locking down again, like the UK, importers are potentially at a little bit of an advantage, because on a broad basis, the rand has strengthened again, and the domestic market is relatively open again. South Africa is now from being one of the most heavily locked down countries in the world, it's now amongst some of the least locked down countries in the world, with a stronger rand, with low interest rates. There are some positives for certain sectors and for certain businesses. Debt servicing costs are a lot easier. The rand is firm. If you're importing, that's a benefit. And the local market, while still very constrained, as I said, is unlocked by and large, and economic activity is allowed to take place. So it's not all bad news in this report. And in many ways, we're now just trying to monitor how sustainable the recovery is and where it's going to sort of top out and start to level off again. And what is the level that we're going to stabilize at, and how much below where we started before COVID are we going to be? And that's going to start we're going to start getting a much clearer sense of that, Gerard, through the course of the fourth quarter of this year and into the first quarter of next year. We're really going to start, I think, getting a much clearer picture of the shape of the recovery.
Yes, Russ, there's so much I want to ask you about the fourth quarter numbers and things that you're seeing in the economy. But I suppose just quickly a word, you mentioned taxation and the risks to that, but also a theme of expropriation risk. Now, expropriation without compensation, those things are always lingering. How do we make sense of that at this point?
Look, I think we've got to always just be aware that expropriation risks, the risks of the state flouting property rights and aggressing against property rights and so on, are very much related to how desperate the government becomes financially. And obviously there's a number of ways that we can assess that risk. One is just how poor the fiscal situation is, and that's obviously a very poor situation. So without the ability to extract more taxes, you do get a heightened risk of expropriation. Without the ability to just print money like they're doing in America, there's a lot more constraint on the Reserve Bank printing money, because the minute they do that, you're going to start to see a much weaker currency. You're going to start to see higher inflation, which creates all kinds of political and social problems for the government. So they don't have as much freedom to do money printing like we're seeing overseas. And so faced with these tremendous financial constraints in these very difficult times, that is when you get heightened risk of expropriation. There is obviously a lot of resistance. There's a lot of civil society resistance to land expropriation, for example, and to various infringements on property rights. And so this is just an ongoing debate and an ongoing battle. Unfortunately, as long as there's a question mark hanging over state expropriation, even if they don't actually expropriate property, as long as there's this question mark hanging over it, it retards confidence. It retards investment spending. It diminishes the ability for businesses to truly plan long term. And that obviously in itself is a problem. So whilst we sit in this no man's land, in this sort of twilight zone of being unsure about property rights, that in itself is the problem. And the government refuses to provide decisive clarity on that issue. And as long as that's the case, I think it's in and of itself a negative.
Russ, and now moving to events in the fourth quarter. Now, we recently had the further downgrades by, I think it was Moody's and Fitch, the ratings agencies also, and then the US elections. And how are we, or South Africa as a country, positioned in terms of those events?
Well, what was fascinating is last week, President Ramaphosa held his third annual investment conference. There was very little mainstream discussion or reporting about it. It almost seems as though people just ignore it these days. And I'm not sure people see it as a really credible means of recovery. The idea that very large corporations and government get into a room and talk about committing capital. You know, at the end of the day, real investment recoveries are not, they just are not things that happen behind closed doors in conferences. They are things that happen because there's economic opportunity, there's a business rationale, there's a reason for investing, and the background policy environment, the background protection of property rights, the labor laws that we operate in, and the fundamental growth prospect of the economy is all critical to that decision. So we had this big investment conference again, and a few days later we're downgraded by the ratings agencies even deeper into sub-investment grade, which just shows you that those ratings agencies, after the mini budget and after the investment conference, don't see any particularly good reform value coming out of those events. And that's quite an indictment on where the government is at. So that's where we sit from a domestic policy perspective. You know, in relation to the US election, what we've seen with the presumed Joe Biden victory is this sort of sense of a return to the days before Donald Trump, when everything was kind of normal and nice and the world was friendly with each other and trade was free and capital flows were free and so on. And as much as I think that that's not the correct interpretation of the pre-2016 world, the idea is that a Biden victory will sort of allow for a sort of more sort of a friendlier global trade environment. And what you saw immediately was the rand strengthening, capital flows resuming back into emerging market currencies. So as long as that story holds intact, it's probably going to be good for the rand. It's probably going to be good for South African for inflows into the South African markets. There remains this sort of question mark over the US election. Donald Trump and his legal team have been trying desperately to nullify the result, to cast doubt on the veracity of the election result. It seems like they're not having much success in being able to prove that case. We have to wait and see what the final outcome of this process is going to be. It seems like they're hitting a lot of very difficult legal snags and finding it extremely difficult to prove their case. And as long as that's the case, then you would expect, you know, the smart money is probably on Joe Biden prevailing and being inaugurated on the 20th of January. I think that the US is a very divided and volatile political society now. But as long as Biden prevails, you're probably going to get a period of relative calm. It might not last long, but I think you'll get a period of relative calm. I don't see any risk of Trump, you know, not handing over power or not vacating office or anything like that. I think that would be a very, very unlikely scenario. The risk scenario, the volatility scenario, would be that Trump's legal claims and allegations actually start to find some sort of purchase in courts of law, and that there is actually something to his allegations about election fraud and so on, and that suddenly starts to throw open the possibility that Joe Biden won't be the president and that there's going to be a massive legal contest for the presidency.
Mm.
That's going to create an immense amount of volatility. At this point, seems to be a low probability event, but that is just something that people have to be aware of. And it's not easy to follow the news on this because there is so much censorship going on at the moment. There is censorship of going on in the mainstream media. There is censorship of YouTube and Facebook opinions.
Mm.
It's a very strange time that we live in, where the sort of big tech, technocratic elites are very much trying to curate one particular perspective and one particular view of the world. And the censorship is real. I mean, things are getting banned, things are getting blocked. It's hard to share certain news items. So not all is quite what it seems, and not all is well. Something's a little bit rotten in the state of Denmark when you're having to see this much censorship. And so we're in I think times where people just have to be very aware of finding information from all different kinds of news sources, mainstream but also non-mainstream sources. Evaluate the quality of that news, and really just be aware that the potential for significant political volatility overseas in a time of lockdowns, censorship, just tremendous anger amongst the public that their livelihoods are being taken away, fear of a virus. This is all a recipe for a lot of volatility, of anger, and of potentially global economies going back into some kind of a recession period. And South Africans have to be very aware of the environment that they're operating in.
Yeah, Russ. So it's quite an uncertain time, I would think, for businesses and business owners at this point in time. So yeah, good thoughts about them getting good sources of news and media, and always remaining critical in this time about what's being portrayed in the media and on all sources, I suppose. And one thing to ask about, and we did speak about this, but I believe the ANC has a certain narrative about reform and about economic reform. And even you might see some of mentioned by the likes of Minister Tito Mboweni about reform. So we have spoken about this. One of the elements is the big drive for infrastructure, and that. Russ, just quickly your thoughts on the chance of actually having positive reform at this point as things are going.
Look, I mean, you can never say never, but the odds of real reform are low. Changing the status quo in the ANC is very, very difficult because you have so many interests that are against real reform. You've got such a big patronage network feeding off the state-owned enterprises, feeding off the tax revenue, feeding off the borrowing. It's very difficult to fix all this. And of course, we know that most of the party is either directly or indirectly corrupt. And so anyone who tries to reform, there's probably some dirt on that person in some way or another. Not in every case, but it's just very difficult from a realpolitik perspective to actually institute these kinds of reforms. We've always said that's why we're tracking the presidential policy scorecard. We try and make it as objective as possible and let the data do the talking. If we start to see the data improving, if we start to see better outcomes in the labor market, better outcomes with the currency, better outcomes in the bond market because we're managing our fiscal situation better, all these things, then we'll believe that there's actually reform going on. So I think that's one way to answer it. I think that even if there's some desire to reform things in the right way, I think it's extremely difficult for the government to do that. So that would be how I would think about what's going on. I think that what we've really got to be concerned about is actually, potentially a worsening in policy outcomes. Globally, the trend is towards sort of almost a Sinofication of policy, a China type policy environment with heavy-handed controls, lots of surveillance of the population, lots of mandates and forced rules and regulations that people have to comply with. And we saw through our own lockdown in South Africa that the ANC was very amenable to that sort of policy making. So I think we've just got to be aware and vigilant of that, Gerard. Always leaving open the slight possibility that some positive reforms could happen. And if and when they do, you'll start to see the benefits of that in the marketplace. But trying to sort of predict this the whole time, I think is quite a tiring game that I don't think is very fruitful.
Russ, so in a sense, that is those are the cards we are dealt with, and that business owners are dealt with, and so on. So, any final thoughts from your side about what to do? I suppose business owners should be careful, always keeping an eye on the policy environment, looking for opportunities. But yes, in a sense, it's a challenging time.
Look, it is, and again, we always make this point: people know how to run their businesses better than we know how to run their businesses. We're just analysts. But there's no doubt that in a world that has endured such a heavy shock, which has thrown everyone off balance a little bit, there are opportunities. I mean, it's maybe a little bit cliched to say so, but I mean, I've seen it with my own eyes at a micro business level, the way certain people just thinking a little bit more innovatively and just adapting to the situation are doing extremely well. There is recovery taking place. This is not the second quarter of the year when everything was shut down and there was a tremendous huge loss of jobs and a loss of incomes and all that. There is a repair process going on, and the process of production and exchange and consumption by relatively free people is a process of wealth creation. And so there's opportunity. There's opportunity to do things a little bit differently. There's an opportunity to maybe rethink your cost structure, your technology set of how you produce what you produce. That is all still very relevant, I think. I think that's something to say. I think another thing to say is don't be too negative on the rand. The rand is a reasonably well-managed currency still. That might change in the future. We're always monitoring whether that's going to change. But right now, it's reasonably well-managed. The Reserve Bank doesn't just print money in huge quantities like they do overseas. And so the rand is on the front foot. Commodity prices are doing well. That's going to benefit our mining sector. That benefits some downstream manufacturing activities. A lot of those activities through COVID, through the lockdowns, have been able to cut staff. So they're potentially operating more efficiently. They could be more profitable. So it's not all bad news. Life goes on. Activity still goes on. It's very tough out there, but within that very difficult environment, there's opportunity. And so I think that's what I would leave people with is it's not all doom and gloom. Be vigilant, watch closely. It pays to be cynical when evaluating government policy. One's got to just be careful how one thinks about the tax regime, how one thinks about government restrictions, the risk of renewed lockdowns next year in South Africa as winter comes next year. COVID cases will go up again. Will that see us go back into new lockdowns? Are you prepared for that? Are you going to build up sufficient savings so that you can endure another lockdown? These are the kinds of questions you need to be thinking about as we go into next year.
Okay. Russ, important points. Thank you very much, and very enlightening about how to approach this difficult but also interesting times that we are in. So Russ, thank you for joining us on the Policy Radar op die Beleidsradar vandag. It was good talking to you, and then yes, we'll link to the report in the comment section and in the description to this video, and please read it for good ideas about the global and domestic economics, and also take a look at the barometers and the policy scorecard. Thank you so much, Russ.
Thanks, Gerard. Great being with you again. Cheers, everyone.
Thanks. Cheers.